Okay, so good morning once again to you all professors. Welcome to the first lecture, or should I say class, for accounting on Omega Vacation classes. So I think we've pre-discussed some of the issues about topics covered and where there are challenges. So at the appropriate time, I'll share the scheme of work with you. But the first thing we are going to look at will be the correction of errors and suspense account. Correction of errors and suspense account. So let me read this introduction to you, and then we can dig in and start eating the sweet side of correction of errors. Okay. So Akoli made a point that his balance sheet has always not been balancing, right? Now the question is why? It is possible that he's making some errors in the preparation of his balance sheet. Okay. And remember, the balance sheet is prepared from the trial balance. It means that when you make errors in all the processes that leads to the extracting of a trial balance, definitely your sheet would not balance. So when a trial balance is out of balance, the difference is used to create a suspense account in order to make the trial balance match, pending the discovery and correction of the errors causing the difference. What this point means is that anytime you construct a trial balance and it doesn't agree, and here we are trying to say that, for example, let me do a rough trial balance here for us. So let's say you have your trial balance. I believe we are all now comfortable with trial balance, right? Let's say this is your debit column and this is your credit column. If at the end of the day you total the columns and you get 10,000 on the debit side, but on the credit side you had 8,000, then it means there's a problem because your trial balance is supposed to balance. So normally what the accountant will do is to create a suspense account. So suspense. So here the difference is 2,000, right? And this 2,000 is short at the credit side. So normally the suspense account keeps the difference at where the difference is supposed to be, right? And now we can say that the total will be up to, say, 10,000, 10,000. So that's the rationale of the suspense account. It is used to keep any difference in the trial balance, first of all. Now, it is not a permanent account. You can write this down. It's not a permanent account. It is a temporary account that is opened to keep this difference so that the accountant can go and investigate why that difference is there. And most of the time, the difference arises because of what? Errors. Errors. So that's why there is a need for us then to correct the errors and then clear off this suspense account. So that's the whole idea about correction of errors and suspense account. There is a difference in your trial balance. So put it in suspense account. Go and investigate what is causing that difference. And then come and correct that error. Okay? So by the end of the lesson, I'm expecting my professors to be able to do the following. You should be able to list and state the examples of errors. Okay? The examples of errors that causes some of these difference in the trial balance. But it is interesting that some of the errors would not cause any difference. Some students, prepare trial balance and it agrees 20,000, 20,000, but when they present it for marking, it comes back with lower marks. And then they say, sir, my trial balance has balanced. So why is it that I'm getting things wrong? So not all errors will cause disagreement in the trial balance. Okay. Some of them will not show. Your trial balance will still agree. And as we move further, you would appreciate some of these errors. Okay. So we'll look at those examples of errors. Then we'll look at how to correct them using the journal entries. Okay, so we correct errors using the general journal by making in the putting in the right entries. And of course, the suspense account, which I've briefed you about, will come into the picture. And sometimes you can even be asked to correct or adjust the net profit, because you know when you make errors, it will affect your profit. For example, if your sales is 2 million and then you made an error and recorded 2.5 million, that error would make your profits overstated, right? So you need to always correct and adjust your profit as well. And sometimes even redraft your trial balance and your balance sheet or your final account. So these are lesson objectives, right? By defining errors. I think that I'll spare my professors with these details. So let's come here and start doing things for ourselves. So now I'll put things in perspective for you. You should appreciate the rationale for this particular topic, correction of errors. So first of all, we need to define an error in accounting. What is an error in accounting? Yes, proportion.
So please, errors are the mistakes in financial accounting that results from the misapplication of accounting principles and methods.
Please slow down and take the words one after the other, because we really want to pen down what you are saying. So let's go.
Okay, so please. Errors are the mistakes in financial accounting resulting from the misapplication of accounting principles.
Resulting from, I'm interested in that one. Resulting from falsification.
No, misapplication.
Misapplication of accounting principles.
Yes.
Okay.
Yes.
Okay. Thank you very much. The word is making your tongue grow. Okay, so
yeah,
let's digest this definition. Okay. Now you should note that accountants are always careful with making mistakes, because not all mistakes are mistakes. In other words, there are genuine mistakes and there are intentional mistakes. Okay. The intentional ones are most of the time seen as fraudulent. If you intentionally make a mistake and you want to hide under the pretense of, oh, I didn't understand the accounting principle or I misapplied, you know, the auditors will query you and you may end up in serious trouble. So in defining errors, I always tell students that you need to qualify the mistake. So errors are either non-fraudulent mistakes. Non-fraudulent mistakes. You need to qualify the mistakes, because if it is a fraudulent mistake, trust me, the auditors will not let it go. So I was making the point that if you are defining accounting errors, you should qualify the mistakes as non-fraudulent. So errors in accounting are non-fraudulent mistakes, okay, that occur in the preparation of account and financial statements. You can put it like that. Or they are non-fraudulent mistakes resulting from misapplication of accounting principles, which is accepted, okay? Now, there are two main types of accounting errors. Please pay attention. There are two main types. So the types of errors. There are two. Number one, we have errors that do not affect the agreement of the trial balance. So there are some errors, they do not affect the agreement of the trial balance. What does it mean? It means that even though they occur, you will not see it in the trial balance because the trial balance will still agree. Now, let me give an example here. Let's say that this is my trial balance. Okay. So we have the debit and the credit. Now let me put in just two items. Let's say we have sales. 5,000. And then we have, let's say cash, also 5,000. If they ask you to prepare trial balance from this, I hope you can do it, right? So you come into your trial balance, you put down your sales in the details or the narration or particulars column. And sales should be at which side, professors? Sales account balance will be, is it at the debit or credit?
Credit.
Credit, okay. So then you put your 5,000 at the credit, right? And then the cash will definitely be at the debit. So then when you sum them up, when you sum the two columns up, your totals will be what? 5,000, 5,000, right? Now, look at the trick I'm going to do here. This same scenario, but this time, when I was preparing my trial balance, look at what I did. I put the 5,000 for sales and the 5,000 for cash on the different side. So I put my sales here, 5,000. And then I put my cash here. Is this not a mistake, professors? And I would want somebody to answer that. Let me get somebody to answer. Prof. Austin Yao. If you see this trial balance, would you comment on it that there is an error or there is a mistake?
So no, I won't.
You won't. Wow, interesting. Prof. Bridget, would you see this trial balance as a normal trial balance? Your sales is at the debit 5,000, your cash is at the credit 5,000. Prof. Zoe, what would you say about this trial balance? The silence means that there's an issue. So I really have to take my time. No, I would want Prof. Bridget, Zoe to provide a response on this one. And then maybe Emmanuel Kujo is also on my list. And I think Aseda too is on my list. Portia and Joseph, because you raised your hands, I will not call you. So, Emmanuel, what will be your view about this trial balance? Do you see any mistake? Or you think that it is okay, there's nothing wrong with it?
I don't see any mistake.
Okay. So I think you are aligning with that of Austin here. Prof. Bridget, I really want to hear from you. And Prof. Zoe. Okay, so let me hear from Josephine. Prof. Josephine, do you see any mistake or there is no mistake?
Please, there's a mistake.
So what mistake are you seeing?
Sales is supposed to be credited and cash is supposed to be debited.
Okay, thank you. So that is the point, Professors Austin and Ima. Though the trial balance has agreed, okay, you have 5,000 at the debit, 5,000 at the credit. It has agreed. But look at the positioning of your balances. Sales balance can never be debit. And cash balance can never be credit. Okay, so if you follow the earlier one I did, the cash and sales were at the right point. But in this second scenario, sales has been debited, cash has been credited. This is an error. In accounting, sales can never be debited and cash can never be credited. So even though the accountant has made this error, your trial balance is still agreeing. There's no difference. So this is a particular type of error that does not affect the agreement of the trial balance. So sometimes when you interchange two figures, a figure that is supposed to be at the debit side, you put it at the credit, and the same amount you are supposed to put at the credit, you put it at the debit, then your trial balance will still agree. You won't see any mistake or any difference, I should say. But then there is a mistake. So this is to demonstrate to you that there are some mistakes or errors that the trial balance will not show. So here you will need a technical person to say that your sales should be on the credit and your cash should be on what? The debit. So you see that for this type of error, there will be nothing like suspense. Remember, suspense is introduced when there is a difference in the total of the trial balance. Okay, please note this point somewhere. I'll ask you some other time. Let me see if I can give another error that will not affect the agreement of the trial balance. So let's say that in this same example, right, sales 5,000, cash 5,000. When I was recording, this is what I did, or when I was putting it in the trial balance. So this time, let me put sales and cash at the right spot. Okay. So sales is here 5,000, but I made it 50,000 when I was recording. And then cash, I made cash also 50,000 when I was recording. So you see that your total will still be 50,000 debit, 50,000 what? Credit. But there is an error. Why? Because this is the original amount, 5,000, 5,000. But when you were posting to the trial balance, you've inflated the figure to 50,000, 50,000. But this mistake you have committed is not showing in your trial balance because the trial balance total are equal. Okay, so this is to prove to you that there are some errors that will never show in the trial balance because the trial balance would always agree the total will be equal. Okay, so that's the first type. The second type are errors that affect, okay, errors that affect the agreement of the trial balance. So errors that affect the agreement of the trial balance. So I think we can demonstrate that as well. Okay, where for some particular errors, when you commit them, there will be a difference in the trial balance. Let me give an example here. So let's say that I have this set of balances. Let me use the sales cash scenario. So sales, this time sales is 1,500. Okay. And then we had a cash. So we sold goods, but the person paid cash of 1,000, and then the 500 was in arrears. So the 500 will be the debtor. The debtor of 500. So ordinarily, if I'm preparing a trial balance, sales will be on the credit 1,500, cash will be on the debit 1,000, and then the debtor 500 will add up, right? Giving us the equal balances. But let's observe this. So this is my debit column. This is my credit column. I put the sales at the correct place, 1,500 at the credit side, where it's supposed to be. Then I put the cash also at the right place, 1,000. Okay, but when I was posting the data, look at what I did. So the debt is supposed to be at the debit, but I made a mistake and I put it at the credit. Let's do the totals and see. You realize that the debit side will be how much? 1,000. And the credit side will be what? 2,000. So now you see that this mistake that I've made, it is showing in the trial balance because the trial balance is not agreeing. So this particular error is affecting the agreement of the trial balance. And what error is that? The debtor's balance is supposed to be at the debit column, but I put it at where? The credit side. So if this happens, then we say we put in a suspense account. Okay. So the suspense account will keep the difference. So here the difference is how much? 1,000, and the difference is supposed to be at the debit side to make the thing balance. Okay. So now, if you put the suspense there, you would have 2,000 against what? 2,000. And like I indicated to you, this is only temporal because we are going to do the investigation to see why it is happening. So when you go and do the investigation and you realize that, oh, the debt should be at the debit side, okay, then you go and pass the correct entries to correct it. You can't go and use eraser or correction fluid to clean it and say, no, you would have to pass journal entries. And that's what we are going to be doing. Okay, so professors, these are the two types of errors in accounting. Errors that do not affect the agreement of the trial balance, and then errors that would affect the agreement of the trial balance. I'll pause for questions, please. If there are questions, let me have them. Any questions so far? Does that mean we understand perfectly? Proportion. That is a thumbs down. So what is your, yes, what is your question?
No, it means no question.
But this is not a thumbs up, or this is a thumbs down.
Yes, it means I don't have any questions asked. That's like made it thumbs down.
Oh, okay. Wow. I am hearing this for the first time. Anyway, okay. So we have defined errors. We have stated the two types of errors. Now, the next thing we have to do is to pick each of these types of errors and look at the numerous examples we can have under each of them. So we'll pick the first one, which is errors that do not affect. So we want to look at those errors that do not affect the agreement of the trial balance. Okay, and as sweet as it sounds, there are only 7 of them. Only 7. 7 of these errors. Okay, 7. Since Prof. Portia has already discussed this topic, Portia, can you list the 7 errors that do not affect the agreement of the trial balance?
Yeah. Error of omission, error of commission, error of principle, error of complete reversal entry, and service. Those are the ones I have in mind.
Okay, well noted. So, professors, we have error of omission. We have error of commission. So we'll be looking at all these errors. So error of commission, we have error of principle, we have error of original entry, error of original entry. We have error of complete reversal of entries. We have compensating errors or error of compensation, and finally error of duplication. So these are the 7 errors. These errors, when they occur, the trial balance will still balance or it will agree. Commission, omission, or omission, commission, principle, original entry, complete reversal, compensation, duplication. And please, this is highly examinable. You can have a simple theory question like, state 3 errors that do not affect the trial balance. Explain with an example, right? Okay. So let me ask, is any of our professors going to attempt looking at the name of the error? Can you attempt explaining what this error is about? Omission, duplication, at least these words are, very familiar. Omission, duplication, principle. Today my professors are quiet, so what's up? Or you prefer to follow today? Okay, Austin, let's hear you.
Sir, please, the omission. The error of omission is when a whole transaction is entirely missed out or like not recorded at all. So that one, it won't have any corresponding debit or credit, so it won't affect the trial balance totals.
Okay, so our colleague Austin has given us his view about the error of omission. Thank you, Prof. And of course, the point you made is very valid. My professors, Emmanuel, Eugenia, Zoe, please tell me something, I beg. Okay, Portia wants to say something. Portia, let's hear you.
The error of complete reversal of entries. The example you give is they exchange the account for the double entry, that is the sales at the debit side and the cash at the credit side. Even though they exchange it, but they use the correct amount, which made it an error of complete reversal of entries.
Okay, thank you very much. So complete reversal, they have reversed the entries. Okay. Would any of my let me talk of this one. Duplication. Prof. Zoe, duplication. What do you think this error would be about? Duplication. Prof. Zoe, I want you to try this one for me. Duplication.
I think this where the transaction is recorded twice.
Oh, thank you very much. Thank you very much. You see, this is why I always want my professors to talk because they know the things. They know it. Thank you very much. Prof. Bridget and Prof. Eugene, I'm coming to you. You know the thing, pa. So tell me, right? So duplication, yes. When the transaction is recorded twice, so it's repeated. I don't know if any of the remaining principle, does it give any clue? Original entry, any clue? Compensation, commission. Okay. So I think on the face value, you can be comfortable with the omission and the duplication as well as the complete reversal. The rest looks a bit, So we'll have to pick each of them, know what they are, give examples, and also, most importantly, know how to correct them. Know how to correct them. Okay. So let's pick the first one, an error of omission. So error of omission. And as Portia rightly put it, Austin, this error occurs when the transaction is not recorded in the books at all. When the transaction is not recorded in the books, in the books is different from in the account. Okay, because you know that the double entry is debit one account, credit one account. So when you say it was not recorded in an account, then it's possible that they recorded it in one account, they didn't record in the other account. So always use was not recorded in the books or was overlooked. Okay, so let's write it. It occurs when a transaction is not recorded in the books of accounts or overlooked. So example, sold goods to Kwame, 10 million Ghana cedis, was not recorded in the books. Or if you meet an examiner who is very benevolent like myself, will say, was not recorded in both the sales account and Kofi's account. So the idea is that it was not recorded at all. So there was no debit, there was no credit. Now, if you analyze further, you would appreciate that if the thing was not recorded in the books at all, then it will have no impact on the trial balance because at the end of the day, it's 0-0. Nothing will show in the trial balance. Okay. That is why this error would not show or would not affect the trial balance. How do you correct it? It's very simple. The transaction was not recorded. So to correct the error, you have to record the transaction by passing the right double entry. The right double entry here means you will debit one account and you credit another account, depending on what transaction you have at hand. I hope we are not confused. Okay. So let me give an example.
No.
Yes. So let me give an example. Credit. So example. Credit sales to Bridget. $500 was not recorded in the books. Was not recorded in the books. So this is a typical error of what? Omission. How to correct it? So how to correct it? You pass the correct double entry. So professors, to correct this, what do you think will be the correct entry to record this transaction? Credit sales to Bridget, $500. Credit sales to Bridget. For this one, I expect more hands. So I expect more hands. Credit sales to Bridget. You debit who and you credit who. I expect my professors to know this one. Emmanuel Kuju. Credit sales to Bridget. Who do you debit and who do you credit?
Say please, you debit sales and credit Bridget.
So since we are doing correction of errors, I would assume that Professor Kujo just committed another error. So you have completely reversed the double entry, right? Which is another error we would look at. So I think you mean to say we'll debit Bridget and credit sales, right? That should be the correct thing. Okay, so I'm not disturbed at all because you are trying to prove to us that indeed an accountant can make a mistake. And sometimes, you see, it's interesting. You might not know what the accountant is going through or the kind of pressure. Okay, so sometimes simple things like this. You go to real life businesses, credit sales to Bridges, and the accountant, by some weird reasons, will go and even debit purchases. It happens, okay? So it's normal. So Prof. Kujo, I'm correcting the error you just committed, okay, under the error of omission. So we are going to debit, so you debit Bridget, right? And then we credit sales. So this will be the right double entry to correct this error. Okay, but normally we prepare a journal. We prepare the journal to correct it. And I think we'll look at the journal when we have discussed most of the errors, right? Or maybe I should be doing it side by side so that professors can get the concept. Okay, but probably I'll shift it to the next type of error. Okay, so that is about error of omission. Okay, it occurs when the transaction is not recorded at all in the books. At all. Okay. Please, any question? Any question? Any question? If there are no questions, okay, Augustine, let's hear you.
Sir, please, can you come on how to correct it?
Okay, so what is the error? The error was that the accountant didn't record it. So it means he didn't do any debit, he didn't do any credit. So if you meet such an error and you have to correct it, it means to correct it, you have to record it. How do you record it? You debit one account, you credit one account, right? So it is the type of transaction that will tell you which to debit and which to credit. So in this example I gave, it was credit sales to Bridget, which was not recorded. So to correct it, we have to record this transaction. And if you are recording credit sales to Bridget, you debit Bridget and credit sales. So maybe let me give another example so that professors can also try, right? Let me give another example. So this is example 1. Example 2. So maybe what? Okay, so let me add dates to it. On 1st June 2025, the business bought a land of $6,000 with check. This was not recorded in the books. Okay, so I've given another example. On 1st June 2025, the business bought a land of $6,000 with check. This was not recorded in the book. So you see, for most of the error of omission, you see was not recorded in the books or was overlooked. Okay, I gave you another one, was overlooked. So that will give you the clue that, okay, there's an error of what? Omission. In some books, you see something like error of complete omission, because we also have error of partial omission. Okay. And I want to believe my professors can explain what a partial omission. Partial means that they recorded one and didn't record the other. That's, they did the debit and didn't do the corresponding credit, or they did the credit, they didn't do the corresponding debit. That's partial omission. But this omission here is a complete one. They didn't do any debit, no credit, right? So let's look at the example 2. What entries do you think you would have to pass? On 1st June, the business bought a land, $6,000 with check. This was not recorded in the books. Let me go to Prof. Eugenia. Prof. Eugenia. Portia, I know you are ready to answer. I'll call you later. Prof. Eugenia. Don't worry. If you make an error, we are dealing with correction of errors. So we'll correct it, right? So don't worry. Prof. Eugenia, I said that your breakfast has breakfast not also, Anna. Or you are still processing the transaction? Prof.
Please, were you asking me a question?
Yes, I was asking you a question to tell us the double entry for.
No, I didn't hear because the Zoom meeting was reconnected.
Oh, sorry about that. So then, did you get the explanations I have made so far?
Yes, some of them.
Okay, so at what point did you get lost so that I can update you and get you to answer my question?
So please answer the example 2 question you wrote, then it went.
Oh, okay. So you understand that error of omission occurs when the transaction is not recorded. That you got that point?
Yes, please.
Great. So we gave an example that credit sales to Bridget was not recorded in the books. So the whole idea is that if the transaction was not recorded, then to correct that mistake, because the mistake was that you didn't record it. So to correct that mistake, you have to record it. And in recording transactions, you know what to do. You pass the double entry. You debit one account, you credit the other, like we did earlier. So we gave the first example, credit sales to Bridget was not recorded. So we had to record it. And in recording it, we had to debit Bridget and credit sales. Okay. So I've given another example that on 1st June 2025, the business bought a land of $6,000 with check. This was not recorded in the books. So again, the mistake is that it was not recorded in the books, making it an error of omission. So now let's correct it. And to correct it, we have to do the debit and credit. So I'm only asking about which account you will debit and which account will credit for this transaction?
You credit the check.
And you debit who?
And you credit the check.
And
debit the land.
Okay, so debit the land, very accurate. Credit the check. The credit is accurate. The check is what I don't like. Okay, so let me put it here. So we debit, the debit part is very perfect. So we debit the land. Of course, we credit, we don't credit a check. We credit the bank. Anything related with check is bank, right? So that is why I didn't like the check. Yeah. Okay, so you see my accountants are making mistakes now. So you see why correction of errors is very important. Okay, so in correcting this error, you debit land and you credit to bank. So professors, I think you'd have to sharpen your double entry knowledge for you to be very comfortable here, right? So I would employ all of us to go back to look at when you sell goods, who do you debit, who do you credit? If you receive money from debtors or customers, they are very important. Return out was carried. Maybe I'll write summaries of the transactions for you so that you can quickly update yourself. Because these are the transactions that will pop up in these errors, right? And we need to know how to correct them. So for example, you can get a transaction like returned goods to AC 5 million. This was not recorded in the books. Okay, so the transaction is returns, return outwards. We return goods to AC, return outwards. So if you have forgotten the double entry for return outwards, you are going to solve, right? Okay, but I think so far so good, right? Okay. So that's about error of omission. Let's look at the next error, which is error of omission. And if because I don't want to confuse my professors, I want to do this at a slower pace as possible, right? So error of commission. What is this error? It's an interesting error, eh? So let me check the names. Perfect example in class. You know we have two Akolis here. We have Austin Akoli and Augustine Akoli. All of them two are 10, 10, 10. Austin, Augustine, 10. So imagine if these two 10 Akolis are dealing with a particular business. The accountant can get confused. So even though he was supposed to record the thing in Austin Akoli, he will go and record it in Augustine Akoli. Even though I'm not practicing accounting, but these are students in the same class. They are all in the same class. And sometimes when I'm recording their marks, I'm very careful because the slightest pressure, I will end up swapping the marks because they are all Akoli and Augustine Austin. I need to investigate this. Okay, so we say that this error occurs normally due to name similarities. Right? So the accountant makes the mistake of recording in the wrong person's account because that person has a similar name with the actual person. So instead of probably, you know, in Akan, how we spell our names, we have Kwesi with A. I think this is for the Ashantis. And the Fantis go Kwesi with E. So the accountant gets confused. Hey, is this the Kwesi with E or Kwesi with A? And by the time you realize he's put it in the wrong person's account. So let's define it. It occurs when an accountant makes the right entry in the wrong person's account due to name similarities. So follow the definition well. The accountant makes the right entry. So the entry is correct. He was supposed to debit, he was supposed to credit, and he did exactly that. The right entry was done, but in the wrong person's account due to name similarities. So let's say the accountant was supposed to debit Austin Akoli. Okay, but he went to debit Augustine Akoli. So the debit was correct, the entry was correct, but in the wrong person's account due to the name similarity. Now, if he was supposed to debit Austin Akoli and he went to credit Augustine Akoli, please, that is not error of commission, because he was supposed to debit and he went to credit. So he has changed the entry. The entry should always be correct, or it should be right. So maybe in place of the right, I should say makes the correct entry in the wrong person's account due to name similarities. I think I saw a hand up. Austin, was that you?
Sir, please, I just wanted to ask whether this error deals with personal account, but I realized that yes, it was true.
Yes, so it normally deals with personal account, right? Personal account. So sometimes we are dealing with several companies. One company is Biney Company Limited, another one is Biney and Sons. So the accountant always gets confused as to which account because of the name similarities. Okay. So example, cash. So example 1, cash paid to Kwesi $50 was recorded in Kwesi's account. Now let's observe something here. Cash paid to Kwesi with A was recorded in Kwesi with E's account. So you always have to determine who the wrong person is and who the right person is. So in this transaction, who is the true person we had to record the transaction in his account? Today, Portia is really on, I don't know, Portia, have you taken any energy drink? Prof. Prof. Kujo, I think this one is straightforward for you, right? Cash paid to Kwesi with A was recorded in Kwesi with E's account. So who is the wrong person here? Is it Kwesi with A or Kwesi with E?
Sir, please, the Kwesi with
Okay, so Kwesi with A is the true person, the right person we have to acknowledge, but we put it in this wrong person's account. So to correct it, I asked that because to correct this error, okay, so to correct this error, you have to pass an entry to remove the transaction from the wrong person's account, Or let me say, pass an entry to remove from the wrong person's account. And put it in the right person's account. So you pass an entry to remove it from the wrong person, right? And you pass another entry to put it in the right person account. Okay, so here again, you have to be sharp with your double entry. Let's analyze this one. Cash paid to Kwesi was recorded in Kwesi's account. So technically, okay, let me allow Portia to talk some more. Portia, let's hear you.
So say, with this question, we will credit cash with $50 and we will debit Kwesi with the E with $50.
Hey, my favorite accountant, Portia, you have committed an error. In an attempt to correct an error, you have committed another error. Here, cash will never appear in our books because we have no issues with cash. The issues we have is an error in this wrong Kwesi's account. So that's what our interest is. You want to correct your own error. Okay, go ahead.
Say, say,
Yes.
please, I don't understand what you are saying right now.
Yes, because you are making errors. So hold on and listen to me. Okay, so one of the techniques in dealing with errors is pay attention to the error. Don't bother about the other part which has not been exposed to you as an error. Okay, so here, what is the center of the error? It says that cash paid to Kwesi was recorded in Kwesi's account. So technically, the error you are looking at is an error in this Kwesi, the Kwesi with ye. Okay, they put this in this wrong person's account. Now let's ask ourselves, cash paid to Kwesi. So where did they record it? If you pay cash to Kwesi, you need to debit Kwesi, right? So it means that they debited Kwesi with the cash of 50. Now we have identified that this is wrong. It shouldn't be in this Kwesi with ye's account. So how do we correct it? We have to pass an entry to remove it from here. Okay, to remove it from here. And then pass another entry to put it in the right person's account. So Portia, hold on. I think when I'm done, you get the point well, right? So here, to remove it from this wrong Kwesi, what do? We'll credit, right? So we'll credit with an amount of, say, 50. And then we will open the right Kwesi with A. And debit that Kwesi with what? 50. Now, in terms of the details or narration, you can simply say that we are removing this cash, okay, to the right person's account, Kwesi. So we credit wrong Kwesi with proper Kwesi 50, and we debit proper Kwesi in the name of what? Wrong Kwesi. So if we see this transaction, what it means is that this 50 was put in wrong Kwesi's account. We have gone to remove it into the right Kwesi's account. So the double entry will be that. Let me add the double entry and then maybe I'll hear from Portia, right? The double entry will be that we will debit the right Kwesi as I did here, right? We debit Kwesi and then we credit the wrong Kwesi. That's what we have done, right? But I opened the account to make Portia at least appreciate the point I was making. So Portia, you see that in correcting this error, you have no business with cash because there was nothing wrong. The mistake was not with cash. The mistake was with the wrong person's account. And if we are correcting it, our interest is in that particular account and not cash. Okay, but you can still bring out your question if you are still not clear.
Say, okay, so it means for error commission, we just open account for personal.
Exactly.
For persons, not
exactly.
for.
Exactly. Okay. Exactly. So your focus is only the wrong person and the right person. You remove it from the wrong person's account, or you cancel it out in the wrong person's account and you put it in the right person's account. The other things will not be of interest to you because there is no error. As it stands now, we have no clue that anything happened to the cash account. Okay, so it means the error was in the quizzes account. So we go straight away and correct it. Okay. There's something in the chat. It says, okay, so great. So professors, I hope you understand. So that's error of commission. I think I'll pause here. We'll deal with the remaining 5 in our subsequent lessons. But let me quickly recap. Today I'll do my recapping by asking professors to tell me what they have learned so far about correction of errors or errors in general. So who is going to do that for me? Or maybe I should ask guiding questions. Okay, so professors, we started by defining errors. And I said errors are non-fraudulent mistakes, okay, that occur in the preparation, you can even say in the recording of transactions and preparation of accounts. Very simple, right? Now, I mentioned that there are 2 types of errors. What are these 2 types of errors? Who is going to tell me? 2 types of errors. I'm expecting all of you to tell me now. Prof. Eugenia, yes.
Please, the errors that do not affect the agreement of the trial balance and the errors that affect the trial balance.
Thank you, superb. Thank you very much. Thank you very much for enjoying breakfast and not inviting us. Thank you. Okay, so these are the 2 types of errors. Now we pick the first one. As a matter of fact, I demonstrated to you what it meant when we say it does not affect the agreement of the trial balance. So for those errors, when they occur, still your trial balance would agree. And then we have those that when they occur, the trial balance will not agree. Now we pick the first type, which is errors that do not affect. And I said we are going to look at 7 of them. 7. I think if I mention your name, you can give me one, right? So first professor to give me the first error that do not affect the agreement of the trial balance will be Professor Augustine Akoli.
Sir, please, error of omission.
Error of omission. So now that you say error of omission, please explain it because we have explained that one.
Huh?
Or I should go and come.
Sir, please. No. Sir, please. This is like, it is when an account has not been recorded at all.
It's not an account. It's when a transaction.
Sorry, it's when a transaction has not been recorded at all.
Okay. Great.
So
thank you very
maybe
much.
Like for example, maybe.
Okay, you wanted to add an example. Let me spare you with the example. If you understand what it is, I know you're comfortable in stating the example. Okay. So error of omission. Prof. Aseda Owusu Ansan, the second error number 2, under the errors that do not affect. Augustine has given us omission. What is yours? Prof. Aseda Owusu Ansan. Aseda Benamifa. Prof. Aseda, I'm waiting for you. Or maybe I should go Nasi. Aseda Fima Kumyamunina. I think Prof. Aseda is flipping through his jotter to get one of the errors for me. Okay. So while you are flipping, let me go to Prof. Zoe. Prof. Zoe, can you give me your error? that do not affect the trial balance?
Error of duplication.
Error of duplication. Thank you very much. Thank you very much. Prof, I said that, is it that you are sleeping or something? Because let me hear from you. You need to state one of the errors. Or your network. I'm sure sometimes the network can make you not able to. Okay. So let me speak to Prof. Emmanuel Kujo. Prof. Kujo, please give me 2. Augustine has mentioned omission. Zoe has mentioned duplication. Give me 2. Why is the network dropping my professors off or something? Okay, so because of our time, let me quickly wrap up. So we had omission, commission, principal, original entry, complete reversal, compensation, and duplication, right? So these are the 7 errors. We'll look under the first type, which is the errors that do not affect. I think we did the omission and commission well. Omission means that the transaction has not been recorded in the books or it has been overlooked. And commission is the accountant recorded in the wrong person's account due to name similarities. I think we'll pause here and adjourn the meeting to our next meeting. If there are questions, please, within the next 5 minutes, you can ask me your questions and I'll deal with them. If there are no questions, I will thank you very much for making it up to class today. And please, I will share the video. So this time I try as much as possible to share the video as early as possible so that you can watch it and get your facts together. So I'll share the videos and watch out for an assignment, definitely. Okay. Prof. Josephine, question, let's hear you. Yeah, Prof. Josephine, go ahead.
Yeah, please, can you go back to the error slide?
Oh, don't worry. I will share the full notes with you, okay? So you can have access to details. These are just petty notes, but I'll give you the full notes so you can have access, okay?
Okay, thank you, sir.
Okay, great. So profs, do have a great day, but please, always, when you play small, you learn more, okay? Play small, learn more. Okay, when you are done with schooling, you can play more and learn small. Okay, so thank you very much. I wish you all the best. You'll hear from me on the page. Bye-bye.
Bye.
Expect an assignment though in accounting as well. Expect an assignment.